I'm just going to do a very short speech to kick off the next stage of the afternoon. My name's Alex Evans. I head the Telecom, Media, and Technology Investment Banking franchise at Barclays. And I'll start with just a big thank you to Claire and Jocelyn. We're very pleased to be sponsoring this again. I thought I'd take a little bit of a risk and give you guys 5 minutes on the perspectives of an investment banker on the disruption we're seeing around telecom infrastructure. Because you're talking about disruptive business models, but we're equally seeing huge disruptions in the way capital is provided. And I think that will shape the business models that come out as well. I think one of the big differences is the way the public markets, the stock markets that provide capital, look at these investment opportunities in contrast to the private markets. And I think one of the problems you have if you're a listed telco, where today the proposition is you deploy the infrastructure, is that the stock market isn't supporting you. If you look at the share prices of BT, Vodafone, Liberty, and TalkTalk over the last 5 years, they're down between 40% and 60%. The market isn't backing them, despite the fact that the core fundamentals of the need for broadband, the need for 5G, are in a secular growth opportunity. And if you try and understand why is that, I think the proposition is as follows. The businesses are not delivering financial growth. They're not delivering sufficiently attractive returns on capital. And when that happened, the telcos then levered up and adopted a sort of utility-like, big dividend-paying commitment. And that transition resulted in a shareholder base rotating from growth investors to income investors. And then, like always in these telco infrastructure businesses, a new investment cycle comes around. We need to fund 5G spectrum. You need to fund fiber rollout. And the investor base looks at the stocks and says, the dividends are under pressure. I'm not going to get that income. The shares come off. The stocks are already highly levered. And then you enter an existential crisis. How do you fund the growth of networks, which is what is your core proposition? And that's why those share prices are down roughly 50%. I think the interesting change that's happened recently in financial markets is this structural low interest environment has created disruption from private capital. So where a lot of the world is able to borrow with negative interest rates, there is just no yield. You know, your traditional pension funds, when they look for core infrastructure assets, can't buy many more ports and tolls or railway roads. Those assets have been priced to sort of 3–4% returns. And so they then look at the telco market and say, fiber is a core end game. It's a long-term infrastructure. Telecom towers are a long-term infrastructure that will be needed to provide 5G. Data centers will be required. And in contrast to the public markets, they value those assets at much bigger premiums to what the stock markets do. And they've got much longer horizons for their returns. Some of this capital is perpetual. And so you're starting to see this arbitrage, that the private markets will value these assets at a very different place to the public markets. Now, I don't think it's just pure arbitrage between different pools of capital. The financial investors and the private capital are also redefining business models. They're forcing open access approaches. They're forcing more network sharing. We hear it today from all the operators who are talking about network sharing. And that's basically because you haven't been able to make returns in the current regulatory environment. You need to consolidate infrastructure to try and get more volume across the same fixed cost base. And I think it's somewhat ironic that actually the consolidation that the operators need is now being implemented by the infrastructure funds and the financial investors rather than the telcos. And it's throwing up some really interesting questions, some existential questions of what is the future of a telco? Should they own infrastructure? Do they need to own infrastructure? Do they have to open access? How valuable, how good are they at holding a customer base if they don't own the network? Can they fight off competitive alternatives from OTT providers that will go after that customer base? And I think given the scale of capital required to put 5G and fiber to connect Britain, the volumes are so big that you're going to have this continual tension between the private capital markets and the public markets. And either way you go, you're going to need consolidation, because that's the only way you'll get the financial return of both sets of providers of capital to deliver the critical infrastructure. So from us as a banking perspective, it's a kind of exciting but changing world where we see a lot of M&A coming into the UK. We'll see a lot of consolidation, and we'll see a lot of new financing models. And with that, I thought I'd hand back to David to introduce the next panel on disruption.